Hi, JJ here again with The Art of Value. Welcome. Well, today we're going to look at Alibaba. You might have seen the news that they're splitting or reorganizing into 6 independently run entities. So we're going to look at what the company is actually saying about it, what they're actually doing, including a conference call, a dedicated conference call that they had yesterday about it. So we'll look at some key takeaways from that conference call. It's important to see what the company's actually saying about it, what management's saying, and whether there's some upside for the stock, some big upside in the future from the stock or stocks, because they're allowed to have IPOs, spin-offs. So we'll see what might happen and what the market's thinking already. So let's get into it. So let's start with this. You might have seen some headlines. This one says Alibaba to overhaul China's biggest tech conglomerate into 6 units to reignite their entrepreneurial mojo as startups. Alibaba will reorganize its business into 6 independently run entities to shorten its decision-making process. Also, this is from China Daily. Alibaba announces historic restructuring. And this is from the Financial Times. Alibaba plans to split into 6 in radical overhaul. Tech Group will retain most profitable e-commerce businesses but allow other units to spin off and list separately. In the Financial Times article starting, it says Alibaba is planning to split into 6 business units in a radical breakup that comes after Beijing's crackdown on China's tech giants. The shakeup will put a separate chief executive and board in place for each unit, the company said, and could lead to some of mini Alibabas adopting separate public listings. Mini Baba, I think it's going to become a saying in the future, the mini Babas. The announcement came just a day after Alibaba's founder Jack Ma made a rare public appearance in mainland China, a visit that Beijing hopes will boost investor confidence that it has healed ties with the country's private sector. So he hasn't been seen for quite a while. I think there was talk he's living in Japan. There were photos of him in Japan, but he's obviously made a visit and kind of making up with the government. So that's an interesting move, all this stuff put together. So before we get into what Alibaba's doing and what they're saying, let's have a look at how the market's reacting so far. So on that first day after their announcement, the market jumped 14.26%. So a pretty good reaction there straight off the bat, but these things could just be temporary. Since then, we've got 3.46% today. That's the last session. And over the last 5 days, it's jumped 20.39%. So quite a big jump from this news. But going out further, year to date, it's up 12.39%. Not bad for the year, but of course over the last 5 years it's down 38% over 5 years, so it's got a lot of ground to make up, and they'll be hoping that the market reacts positively over the long term, over the coming months, coming years. Remains to be seen, of course, and it depends what they do. So let's have a closer look at that. So it has been argued in the past by many analysts that the sum of the parts valuation of Alibaba is best, and it seems that the company, by splitting into 6 parts, will try and get the market to realize that value. It may well spin off in separate IPOs these parts of the company. So analysts will be looking at each one. As their own companies, there might be more detail about each one. So the sum of the parts making up the whole, we will have to see each one as its own business with its own CEO, its own board, its own company, and as I said, with the ability to spin off. Will that be in the US? Will that be in Hong Kong? We don't really know yet, but they did provide a little bit of detail on the conference call about such things. They're going to lay out the 6 different business groups. I'm not going to read it all out. There's quite a bit of detail. You can find it online or read it on screen if you want to. But they say, under the plan, we will have 6 major business groups and other investments, each to be independently managed by its own chief executive officer and board of directors. The 6 major business groups that we plan to establish are: number 1, Cloud Intelligence Group, including cloud, AI, DingTalk, and other businesses. 2, Taobao Tmall Business Group, including Taobao Tmall, Taobao Deals, Taobao 1688.com, and other businesses. Number 3, Local Businesses Group, including AMAP, Elima, and other businesses. Number 4, called Global Digital Business Group, including Lazada, AliExpress, Trendyol, Daraz, Alibaba.com, and other businesses. Number 5, Kainao Smart Logistics. Number 6, Digital Media and Entertainment Group, including Youku, Alibaba Pictures, and other businesses. So they're the 6 units, and importantly, they finished with each business group will also have the flexibility to raise outside capital and potentially to seek its own IPO, with the exception of Taobao Tmall Business Group, which will remain wholly owned by Alibaba Group. That statement was from the regulatory filing. There was also an internal email that was sent out to company staff, and they talked about what was in that in the conference call, so I'll go into that in a minute. One question that comes up, and it comes up in the conference call, about working together, the synergies, all these 6 different units, how well will they work together? Because Alibaba has worked well together, all these units together, to form a competitive advantage in China, because we have, say, the e-commerce, and we have logistics, and we have finance, and Ant Group was part of that, and that's kind of already separate. There's a question mark over what's happening with that, and so they're splitting off these other ones into separate units as well. So analysts will quite fairly think, is it going to work together as well as it has with these synergies? And they go to pains in the conference call to talk about these synergies, how they will still exist, they will still be strong, but these could be different companies with different IPOs, with different CEOs, different boards. How well will they work together? That's a question mark over what will happen, and for the stock value as well. How will the market think about that if it doesn't go well? But you have to think there's potential upside. People will be watching closely whether the full value is realized by breaking these businesses off and keeping those synergies. So with this move, they've explicitly allowed the chance for IPOs, for these separate companies to IPOs, which could be interesting for investors because it means should be more detail, far more detail on each business. And let's face it, the China e-commerce part is really where the money is, where most of the profit is, and some of these are loss-making businesses. So they will have to be by themselves on their own. They'll have to fend for themselves, and we'll be able to see how they go. So the loss-making businesses will have to stand on their own feet, and that might be good for, say, a sum of the parts valuation, as many people do now, and I favor that. The China e-commerce is the behemoth, of course. In the meantime, going forward, we can see if they become IPOs, we should be able to see statements from each business separately and see how they go run separately. Some of them may not do well, but if they all kind of do well and be profitable in the end, the valuation should be pretty good. There should be more upside for Alibaba in general, the Alibaba Group. Spin-off companies don't always go well, of course, but Joel Greenblatt, an investor in the book You Can Be a Stock Market Genius, did focus on spin-offs quite a lot, and they can be very good when successful companies spin off smaller divisions. I'm invested in one spin-off, which is Topicus, which is spun off from Constellation Software, a very successful Canadian company with Mark Leonard leading it, one of the best capital allocators of all time, spinning off a European division in the same business model. So I hope that is a successful spin-off. It seems to be doing well so far. We'll have to see. But Alibaba's hoping that they could spin off into separate companies and they all do very well, which could be a very good thing for Alibaba and Alibaba shareholders in the future. We'll have to wait and see what happens. So let's have a look at what they said in the conference call. It's important to hear what management is actually saying, to listen to conference calls. A lot of investors don't bother to do this every quarter, to listen to the conference call. In this case, it's translated, so you can't sort of tell the cadence of what's being said, so it's a little bit difficult. I've edited a little bit the ums and ahs and the pauses while the translator is trying to listen to what's saying. He's translated even the English, people speaking in English, but we can still gain quite a lot from it, I think. What are they actually saying? Let's get into it.
Perhaps the biggest difference in respect of this organizational transformation compared to previous ones is that Alibaba today has already grown into a much larger and more complex organization. We have a wide range of businesses of different natures, different stages of development. They're competing in different market environments and serving different customers. Therefore, this reorganization is more necessary than any previous one, but it's also more challenging. But we do believe that this new organizational transformation will allow all of our businesses to become more agile, enhance their decision making, and enable faster response to market changes. It's important that we have that agility to move quickly and respond faster to change.
So they were stressing there that they have transformed before. The transformation, it's not the only one that Alibaba's gone through. It's true as the stage of life that they're in, but They stress being agile in a competitive environment. They talked about also elsewhere. So it's competitive and they want to be agile, so act like smaller businesses so they can be competitive and agile and move fast rather than be this big, slow behemoth.
This transformation will also create greater ownership and provide incentive plans to the management teams and employees of our business groups and our other investments, which will drive entrepreneurial innovation that will stimulate growth in our business. And that's very important. So I also said in my internal letter circulated within the company that across all of our businesses, all the business units, we need to become more entrepreneurial and unleash more ownership across all of those different businesses.
So they're stressing the importance and the desire to be more entrepreneurial within the companies. So breaking them up into smaller ones kind of forces them to be entrepreneurial, to act like smaller companies, startups. And again, the management and the employees having ownership. So, that's important from my point of view as an investor. I'd like to see management with skin in the game. If they're just hired hands there for a few years and they're getting paid, they don't really care about it. If they've got ownership in the company, then they really are going to try harder. Their wealth is involved, and that's important.
We are fully confident that this new organizational structure will further enhance value for the company as a whole and will be of benefit to our important stakeholders, including our shareholders.
That was important there too. They're talking about the new structure enhancing value for stakeholders, including shareholders. And given the government crackdown, they're openly talking about enhancing shareholder value there.
Seeing the performance of those different businesses with our new segment reporting approach. With this new transformation, I think one of the largest changes will be that each of the segments within the company today will each become an independently operating company. What will not change and what has not changed, because this is equally important, so I would like to spend a moment on that. For the vast majority of our companies, our mission will remain unchanged, making it easy to do business anywhere. That mission remains directly relevant and highly relevant to all of those different businesses. At the same time, we will continue to share the same vision of being a good company that lasts 102 years. So that will continue to be a shared vision across all of the companies.
So they're stressing something that doesn't change, and that's the shared vision, the shared mission that they have, that won't change, even though they'll be operating as 6 separate businesses. They wanted to stress that, as they said, these synergies, that will remain as a shared vision. So if you don't know, they talked about there being a company for 102 years, a good company that would span 3 centuries, because it started in the late 1990s and of 100 years, and then the next century. So spanning 3 centuries is the goal there for the 102 years.
I'm wondering if you could give us a timeline for when these different businesses will IPO, or tell us which might go IPO first. Across all of our business groups and these business group companies, apart from the Taobao Tmall Commerce Group, each business group company will be set up in a way that enables financing from third parties, spin-off, and IPOs. We believe that the market is the best litmus test, so each business group company can pursue independent fundraising and IPOs as and when they are ready. After going public, we will continue to evaluate the strategic importance of these companies to Alibaba, and on that basis, we will decide whether or not to continue to retain control. That will be an important strategic consideration.
So there's a question about the IPOs, the timeline of that, and they said that after they IPO, they will decide whether Alibaba remains in control of those spin-off companies. But the timeline, they didn't really answer that. They were just saying when the market's ready. I don't know what else they could say there, because they can pursue outside funding, so they have to do that, then prepare for an IPO. So I guess it would be staggered. They're not going to do it all at once. They're just going to do it when the market's ready, when the timing seems right.
If anything, the new organizational structure will be a better test, a market test, if you like, of the ability of the different businesses to work together and serve each other and jointly create and unleash value. Within the Alibaba Group, we often talk about the businesses as mutually serving one another, as mutual and reciprocal providers and recipients of services. In this new context, the value of these services, the quality of the services, the cost and reliability of the services can be better evaluated and better benchmarked by the market. So we see this as a very positive move that, if anything, will continue to enhance those very strong and important synergies.
So really, they were talking about all the businesses still working together in a reciprocal manner, but the market being better able to value them. That's what the hope is. You can see there that they're hoping that the market will be able to value them higher, and the stock will go higher. So what do you think of this move by Alibaba to split into 6 units. Let me know in comments what you think of this. Are you a Alibaba investor? I am still. Do you think it's going to be realized value for the company? The stock will go higher, or several stocks, maybe 6 stocks in the end? We don't know. 6 companies. We'll have to see what happens. If you've made it this far in the episode, do consider subscribing if you're not already on YouTube or on Spotify video, on Rumble, or on your favorite podcast app. Thanks for watching or listening, and I'll see you again.